All right, so let's the liquidity grab. I call it the liquidity grab 2 trader because we actually have two strategies in the trade room. We have liquidity grab 1, which takes all liquidity grabs when you turn it on, and then liquidity grab 2, which takes you're looking to take the first liquidity grab, the first distortion in price. The strategy will after a V bottom or V top. So I was in the room yesterday at 2:59 p.m. I said V bottom on deck, 89.5. A target in an imbalanced market. What does that mean? Well, because when you are in an uptrend, so if you are moving up, which we're moving up, this is an uptrend, and when we are moving up, we're looking to look only for buy setups. So if we're looking for buy setups, what we're going to do is we're going to look for V bottoms that come in first, and when a V bottom comes in, you're going to see it as a big long bar candle that closes, and then you can turn the strategy on, the LG2, and then it will execute your trades for you. It will execute the entry, the stop, and the exit. So for example, at 12:59 yesterday, we had a V bottom, 12:59. This is a very leading indicator. At 12:59, you can see that the market started right before 3 o'clock. It was in a retracement. And so what you do is I put V bottom on deck. Now the reason I said V bottom on deck is because our trend was up. So if you look at our zone is up. So if it's green, we're looking to buy. So then what you can do is you can turn on our liquidity grab trader, and our liquidity grab trader, what it will do is it will look to execute the trade for you. So these are some of the liquidity grabs yesterday, and I'll go into today's session, up to date on today's session. But if you noticed, right when these are all V bottoms that come in. So to understand, it's very simple. A V bottom comes in there with our dual trend filter up. V bottom comes in here. Here's a V bottom right at that level. This is the one I talked about. As we start retracing, as you start getting green candles coming down, what you want to do, hey, good morning, Randy. Good morning, Venkat. Good morning, Derek. As you get a retracement when you're coming down, so when you start retracing down, you want to look to get into the V bottom push. So as we retrace down at this level, I put in the room V bottom on deck, 89.5 target in an imbalanced market. What does that mean? Well, as you retrace down, if the zones are up, if our zones are up, which they were, it's green, it was green, so the zones are up, so we're only buying. So you can look for the V bottom. So this is our liquidity grab chart we like to trade off of on the ES, the 1-120. And so as it starts retracing down, red, you don't worry about turning on the strategy until you get a V bottom and you get a green candle that forms. Once that green candle forms at this level, then what we're going to do, that's called a V bottom. What you're going to do is turn the strategy on, and then the strategy, what we'll do is we will let the strategy pull us in the trade with the hard stop that you have in, and then it will look to execute the targets that you have in also. So these are all V bottoms with trend with the strategy. Now, what you don't want to do is you don't want to get caught in a counter trade like this. So if you have the trend filter off, meaning the MA trend filter off, which I educate doing, just wait for the V bottom to take place. V bottom here. You'll see a big green bar if it's an uptrend, a big red bar if it's a downtrend. Let it take place. Let it fill. You got plenty of time to get in the liquidity grab trader. What it'll do, the strategy will stalk the trade until you have a distortion in price right here. This big distortion in price was right here, and then it fills. You got the distortion in price here, where they're trying to pull the market back against the trend. And then we had a huge distortion in price here for the run. Now, I want to point this out because I go over this I talked about this, guys, over and over again on this big run into the close. I can't tell you how many times I try to educate traders about the push into the close. So at 3:50 Eastern Standard Time, the market likes to do some window dressing where they're going to drive the market higher or drive the market lower. And they give you a big heads up. They leave the footprint what they're trying to do. And sure enough, and I go over this as a time of day trade, I tell traders at 3:50, look for the market to really get some activity, and you'll see a big volume spike in the market, and they usually drive the market to the upside downside. Well, sure enough, we had a V bottom that occurred right, is coming down at 1250. That was the last red candle at 1250 time of day trade. Sure enough, at 1252, we get a big V bottom, and what do? They bring it up. They bring a big distortion in price, big liquidity grab. They take all the counters out of the market. They bring it back up to this 80 and a quarter, 80 and a half, and they just run it. They run it hard all the way up. Within 10 minutes, this market runs to 96, 16 S&P points. Liquidity grab trader caught it. So this is something you got to really remember. Time of day trading. I go over it all the time. Just like in the morning, I say, hey, 9:35 to 11 o'clock is a really optimal time to trade. And then you should look at 12:50 is a time of day too. 12:50, they like to come back in and then like to run it into the close. So it's a really good opportunity for traders to do that. So when you do liquidity grab trader, it's very simple though. We'll look at today's session. This is February 6th. When you get these V bottoms, that occur, what the strategy is going to do is going to stalk the trade until you get this distortion in price, and that is called a pullback against trend, and they try to trap traders that way, and then we get moving to the upside. You know, just like if it was in a downtrend, this would be a V top, and then the first distortion of price would be here, where they try to trap the traders there, and then they close it at 99, and they bring it down to, what, 86. So if you look in today's session, the last trade we had on a V bottom was at 739.51. We had a nice V bottom, but look at the distortion in price they did, catching the wrongly positioned traders. So here it is. Here's your V bottom. There, look at the big distortion in price. Look at that. They grabbed all this liquidity from the market, getting these counter trend traders. They brought it all the way down from 92 all the way down to around the 88 level. So they pulled it back, and then they brought it back up. They closed it, and they just gelled it right to the upside, 92 all the way up to almost 10 points since almost 7:30 this morning in the last hour, less than the last hour of trading. So another thing too, and I want to go over this, is that when you run this strategy, use market replay if you want to emulate these live trades that come through, because market replay is the best way to do it. These are Renko bars. You don't want to turn it on and turn it off and say, hey, this could be my fill in historical data. Historical data doesn't work with Renko bars because it's an artificial open, sort of a fake open. So you want to run the market replay to get a good feel for how this works in live conditions and so on. So I put that in the PDF, on the updated PDF on the members download page. So just make sure we do that also. And so, you know, this is what we like to do. We like to look at the first liquidity grab after the V bottom or V top. And that is when you can turn the liquidity grab trader strategy on. And they're very simple to see. Like this is this is the time of day trade at 350 yesterday. I mean, look at that V bottom, and there's the first distortion in price that happened right after that. That's when the strategy got long, and it just caught that big move up into the close right there. The beautiful thing about strategy trading, number one, are your fills. Number two, how many traders are going to stick in this trade with the 50 tick target as your last target? Not too many traders, because what they'll do is they'll get in here, they'll see these pullbacks, these distortion in prices, and they'll get scared and they'll get out of the market. The great thing about strategy trading, to be consistent with strategy trading, is you have your targets in. This is the first 5 targets, and then I got a break even plus 5 ticks. And the market was so strong, it blew right through the 5 ticks yesterday at 350. Blew right through the second target, blew right through the third target, blew right through the fourth target, and it just kept running. So, you know, that's a great thing about strategy trading. The advantage is great fills because they're fast. And number two is that it takes the emotion out of trading. And that's key. How do you take the emotion out of trading? You stick with the trend filter because the trend filter does all the work for us, because the market can only do two things, right? It can only chop or it can trend. It's not difficult. Either we're going up or we're going sideways. So if we're going vertical, we want to participate. We want to get into these V bottoms on the way up. If we're setting higher lows, let's take advantage on these dips and time it to get in the V bottoms and these first liquidity grabs. Now traders have an opportunity to take the V bottom with trend. The key is with dual trend filter. Without the dual trend filter, it'd be very difficult to execute these trades. And it'll be very difficult without liquidity grab because you get choppy markets like this on Renko bars. Well, we have the advantage of the edge of not doing that, of knowing when the trend is up, when the trend is down. If it's chop, you should not trade the liquidity grab trader 2. If it's a chop market, you can trade liquidity grab 1 coming out of chop when it turns red, red again, or green, green, or when you are breaking through a recent high or a recent low where buy stops and sell stops are being hit. And I'll go over that with members again here this morning. I went over it yesterday. We'll go over that again here this morning.